We'll finish chapter 6 with a bit of theory behind all these control and subsidiary accounts. So first of all, let's look at where special journals fit into the overall accounting process. So we added them in as a step before we put transactions in the general ledger. And where we recorded them now is in special journals, and we had the cash receipts journal, the cash payments journal, the sales journal, and the purchases journal. So one of the features of special journals is that they summarize the firm's regular transactions in special columns, and the benefit of that is it enables the totals to be posted to the general ledger rather than the individual detail, which gets rid of all the bulk. So in this case, all that info in the sales journal just gets posted as one giant debit to debtors control, and the info from the cash receipts journal just goes in as one giant credit at the end of the month. So the alternative was we put that all in individually, which we learned was too bulky and too confusing. Another theory that we need to be aware of is that special journals use a control account with subsidiary ledgers. Well, what's the benefit of that? We've got what's called a checking mechanism. So what that meant was we got the control account there with the balance of 960. Well, that actually checks back to the subsidiary ledger, and the totals of the subsidiary accounts must match the total of the control account. So that'll help us prevent any errors that we might have, which acts as a checking mechanism. Looking at the advantages of control accounts and subsidiary ledgers, this is a good discuss question, some advantages and disadvantages. One advantage is we get rid of all that bulk. Why? Because we've only got one account in the general ledger, just called debtors control or creditors control, for example. Another advantage is we still retain the individual balance of each debtor and creditor. We just put it in the subsidiary ledger. Well, that's good for our decision making because we can decide which debtors to follow up or which creditors we need to pay most urgently. We've also got the checking mechanism, which we mentioned. Going back to reliability, we can make sure our records are free from error. And lastly, doing the trial balance in the balance sheet is really easy because all you've got to do is put one figure in called debtors control or creditors control. However, it does come with some disadvantages. One is this now creates extra work and recording because we've actually got to maintain two ledger systems. We've got the control account and all the subsidiary ledgers, so that's extra work. Might actually be unnecessary for some businesses. If your business only has one debtor and one creditor, well, it doesn't really have much purpose in doing two separate ledger accounts because the subsidiary ledger will be identical to the control account. So if your business is very small, this mightn't be a good system. And we've also got additional staff might be needed. Given that the disadvantage above was that there's extra work, that might mean we need to hire more people, and that means more cost, so that's never a good thing.